Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about Netflix. There was a lot of news yesterday after the earnings call with Netflix, and we saw it fall quite a bit today, close to 7%. So we want to take a look at this and see if it's actually going to be a trend that's continuing or it's going to be just a flash in the pan type of event. So let's get started today with the daily stock analysis. I had a chance today to listen to the recording of the earnings call from yesterday, and it's about an hour long. It's really kind of interesting. There's also a letter which Netflix sends out to its shareholders, and it kind of describes everything that goes on. I think that it'd be helpful if we just go back and retrace some of this and get an understanding of where they are and what's really been making the shares of the stock go down. So let me make the screen just a little bit bigger for both of us so that we can see everything that's going to be going on today. I'll remind you too, I'm here, a little bit of self-promotion. I help people to plan for retirement so that they don't run out of money. So if you need help planning for retirement, go over to my website at richardsfinancialplanning.com. And if you're in Texas, I serve Texas, I'd be glad to set up a time to talk to you. So let's get right into what we're talking about today with Netflix. I know a lot of you know about Netflix, but watch this with me. You might learn that they still do something that you didn't know about. Netflix at 2.16, actually $216.5 billion. Now, here's an interesting fact. I prepared this today at about noon, and when the market closed, the value of the company was down to $215.7 billion. So it was close to $1 billion in value, that drop in this company. It's amazing. Now, when you're talking about big numbers, though, that happens pretty easily. So let's kind of take a look back at what's been going on with Netflix. The big thing, the big news that made everything go wild was this. The past quarter, the third quarter of this year, they added 2.2 million new subscribers. Now, when you compare that to the third quarter of 2019, they had 6.8 million. So you have to ask yourself, is this going to be a slowing trend? Are the good times completely over for Netflix? Are they not going to grow anymore? Let's take a look and see just a little bit further. This is the last 5 days that we've seen in Netflix. 5 days ago, they were trading at 571.11. Today, they closed at 489.05. And you can see, actually, if you follow the spaghetti graph right there underneath the numbers, that was yesterday after what we saw happen with the prices. Now, I covered this stock about a month ago, and we go back and we look a month ago, it was trading at 487.35, really very close to what it's actually trading at today, just in a period of a month. But I think that the real story to look at with Netflix is, where has it been over the past year? A year ago, this stock started out at $278.05 a share. It ended today, as I mentioned, 489.05 for an amazing year at 75.89%. I'm just going to say it this way, folks. So what if it lost about 7% today? It gained 75% even after the loss that we saw today. I think that what you're seeing is, you are seeing in the market, there could be a lot of people that got into this stock at the beginning of the year or maybe last year, and they've decided, I'm going to take some of the profits out of it. That's okay. If you're at a stage in your life, like if you're retired and you're thinking, I need to take this for income or I need to use it for something else, then take some profits. That's quite all right. If you are in this stock for the long term, and when I say long term, I generally refer to anything that's going to be more than 5 years. If you're in it for the long term, you might consider holding on to it. Let me take a look at some of the things that have been going on. These are the earnings over the past years from 2014. If you follow it all the way over from 2014, every single quarter except this quarter, which is the only quarter that they've had since they've gone public, that they were underneath what the estimates were. But what they are projecting is that in the next quarter that it's actually going to pick up even better. Now let's take a look at this in comparison to some of the other companies out there that compete with it. Because remember, when we look at a stock, we look at three things. We look at the earnings, the stability, and the competitiveness. Now, when we're looking at the competitiveness right now, I know that there's Apple that has Apple Plus, and there's also Amazon that has Amazon Prime and all the other things that go along with it. But I can't really compare them very well because those two companies do so many other things. So what I did is I pulled Netflix with Disney because I think that Disney's going to be one of their primary competitors, even though that Disney has theme parks. The thing is, right now, where their emphasis is going to be, you see it with Disney, is going to be in their streaming service. We also look at Viacom, CBS, and Comcast as well. If you take Netflix and you compare it to these other companies that are content creators, they're doing hands and fists and elbows and everything else above them. I don't think it's time to move out, but we always have to end it with this. The past performance is not going to be a guarantee of the future results. Now, when we talk about a company's moat, remember that the moat's that imaginary barrier that's between the competition and the company itself. Right now, the moat is narrow. That means that they do have some advantages over top of their competitors like CBS and Comcast. They have 195 million subscribers, which is significantly up from last year where it was 152 million. Now, like in technology, when you have the network effect, that means that because somebody else uses it, somebody else uses it. It's just common. If you're around the office and you're saying, hey, what'd you watch on Netflix last night? A lot of people have Netflix. It's just kind of the way it works. Their content creation and their purchase is working even better too. The earnings call was very interesting because they touched upon that. They also have some unique technology for tracking customers. We'll talk about that a little bit more in a moment. Put this into perspective. There was a survey which was done by Sandvine Global Internet Phenomena. It was a report. And in this report, it shows that Netflix, out of all the streaming that goes on in the internet, 26% of the global streaming is Netflix. YouTube, which you would have thought was bigger, was 21%. Amazon, which I thought would have been much larger, was only 6%. The average user of Netflix watches that platform 90 minutes every single day. Now, what are the bulls saying about Netflix? The internal recommendation software really helps in scheduling. If you listen to the earnings call, I found this amazing that Netflix actually has fewer shows in content today than when they actually started. Because when they were first starting, they threw everything at it and put everything out there trying to figure out what was working. Now their algorithms can tell them what type of content that consumers like. That's a big advantage over top of their competitors. They also have a huge content library, which helps to retain customers. And then lastly, that I'll talk about on the bulls is they have a lot of international content also, which helps worldwide growth. And personally, I've got Netflix, and some of the international content I'm not that fond of. I really don't like reading subtitles, but some people don't care. Now let's look and see what the bears are saying. What are some of the negative things that could be going on? Netflix has spent billions of dollars to build massive content. And, let's be honest. How many times have you flipped on Netflix and go, nope, 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 and just thought, this is all, I don't like a lot of the stuff's on there. Why do I pay for this? The other thing is the level of competition is increasing significantly, and the cloud use, well, actually, that shouldn't be down there. That's from yesterday, so we're going to go on past that. All right. Today, as I mentioned, it closed at 489.05. The fair value pegged by Morningstar. Now, we're going to look at what some of the other analysts are saying in here, but Morningstar is saying that the fair market value is only $200 per share. Now, they base that on some other extrapolations from that standpoint, but they're very, very conservative. So they are saying that this stock is actually about 144, 145% overpriced, and they only give it 1 star. Remember, the star rating is based on value when we're talking about stocks. Their mutual fund star rating is a lot different from that point. Now, I thought it would be interesting to go back and look. When I reviewed this last month, there were 33 analysts that were reviewing this stock. And if you follow the rotating circle, you'll see that 18 of them said that it was strong buy. Now, with the big drop in subscriptions, in new ads, you would think that that would change a lot. And I think you're going to be surprised that that's not actually the case. There are not as many analysts following this stock right now. It goes down from 33 to 27, but the strong buys only went from 18 down to 16. And there are 3 analysts that are saying that it's a strong sell. Now, let's take a look and see what some of the analysts are actually saying the projections are on this. Piper Sandler's analyst is saying that this stock is going to go to $630 a share. They were $534, and after the earnings call, they changed that. Oppenheimer's analyst is saying that it's going to be at $550. That's up from $515. And then Morgan Stanley's analyst says that it's going to go at $640. So I think that most of the analysts that are out there, the ones that have some worth to them, are really hanging on to the stock. Now, obviously, look, folks, you can't say that there's going to be a guarantee on any of this stuff. It's stocks. There's no guarantee based on whatever the past performance is. But if you're looking at this for a long-term hold, to hold on to this for more than 5 years, let's say, I think that this is good stock to maintain. Should you buy it right now? Well, there's actually an article that was in Barron's today that was saying that if you're one of those people that likes to buy on the dip, then you probably might want to consider that. And that's one of the strategies that I suggest that people utilize when they're putting together what they want to have in their stock portfolio. You really can't go off of saying, I'm just going to buy this stock, one stock. That doesn't work. There was a great quote that I saw on Twitter just the other day. It was from Motley Fool, and it said that out of 25 stocks in a portfolio, you can count on 10 of them being down at any particular time. Now, I even went back and I looked at the NASDAQ 100, and when we have a winning day like yesterday, we had an up day in the NASDAQ. Out of the 100 stocks, there were only 60, I believe 61 of them that were up. There were, let's say 39 of them that were down. And it's the same case with what we're looking at now. We saw Align Technology actually end the day up about 22%, and Facebook's up, and there's several other different stocks, including Baidu and a couple of others. But you have to understand that when you put together a portfolio and you think that you want to have this stock, when I say this stock, I'm talking about Netflix. If you like that stock, if you like what they are doing, if you think there's a lot of potential out there, look, in my opinion, I think they're about 10 years ahead of most of the other content platforms. Disney is just getting started. And did you know that actually Disney owns Hulu? What's that all about? Why do they have a separate platform? They need to put everything together. But they're just starting in their content creation. Yes, Apple Plus is out there, but Apple Plus and Amazon don't even come close to getting to the large content library and the content creation that Netflix has. So that's my story. I'm sticking to it. I would suggest that you formulate your own opinions. And if you want some help with that, I am glad to help you if you live in Texas. Oh, one more thing. I wanted to tell you about this. This was what Reed Hastings, which is the co-CEO of Netflix, said. This was actually in the last maybe 5 or 10 seconds of the earnings call. This is what he was saying he's looking forward to in the next quarter. He thinks that they're going to get to 200 million subscribers. They probably can get to it. That's only 5 million more than what they have now. They're at 195 million. For the whole year of 2020, they will probably end with an addition of new members, new subscribers at 34 million. That's pretty amazing. That's a record. The other thing which is interesting with Netflix right now is they have a large surplus of cash. Their cash is actually good. Now, that's good for a couple of different things, where they may have to go out and create bonds or do loans or something like that to borrow to make content. They're going to get to the point that they have a free cash flow positive situation. That means that their profitability is going to get even better because they don't have to borrow money. And then last but not least is they are creating a new content technology and marketing engine, which will help them to target the type of technology, actually target the type of content that they are making available to customers. This was the last four things that Reed Hastings said on the earnings call yesterday in the last 10 seconds. I think this was the most valuable thing that was out there. So, folks, if you like Netflix, stick with it. If you're into it for the long haul, if not, look at something else. And if you need help, come over to richardsfinancialplanning.com if you're in Texas, and I will be glad to set up a time to talk to you. So, with that said, I hope you come back tomorrow, subscribe, and hit the like button, and I'll talk to you all tomorrow. Have a good evening.